Asian and European stocks are trading higher as investors reacted to central banks in those regions tightening their monetary policy settings. Authorities are raising the cost of borrowing to keep inflation in check, but they're also doing so to keep up with the U.S., which is hiking interest rates, making dollar-denominated assets more profitable and therefore more attractive to fund managers. The South Korean and Singaporean central banks both brought up their benchmarks on Thursday. For its part, the European Central Bank is expected to announce a more hawkish tone later in the day amid rising inflation in the bloc. Meanwhile, China is moving in the opposite direction. The central bank in Beijing is expected to announce a move to increase the amount of cash circulating in the Chinese economy. That would counter the effects of a nationwide slowdown caused by strict lockdowns in major cities like Shanghai and Guangzhou. Now, Ryan Payne is the president of Payne Capital Management in New York. He talked about the rally in U.S. stocks on Wall Street overnight, saying it's a signal that prospects for the world's largest economy are brighter than many expect.
Well, we're starting to see some solid earnings come in. And I think more importantly than earnings being good is the outlook is good. And I think one of the bigger concerns has been how is inflation going to eat into profit margins? And we're seeing it today, like Delta is going to be profitable, ideally this next quarter. So the guidance looks really good. And we know stocks are a slave to earnings, and the earnings outlook is starting to look very positive, which is great for stocks. I definitely think inflation peaked in March, and now you're going to see for the rest of the year as inflation start coming down, contrary to popular belief, because oil prices are already down. You're already looking at the used car market. It's already coming down in price. And you look at the fact that we're going to start moving our spending from goods to services. So supply chains are going to start getting fixed. That all bodes well for lower inflation as we move into the latter part of the year. You've got 2/3 of economists looking for a recession right now. And whenever economists agree on something, it's probably wrong. So no, I think wages are going to continue to be strong. Employment's going to continue to come down. Inflation is going to come down. So we're probably not going to go into recession. If anything, we're going to have a much stronger economy this year than most of the experts expect.